Lecture 11 with trend setups, trend lines. In this lecture, you will learn about trend lines, what they are, and how they can be useful in your trading. You will learn also different types of trend lines and how they can be drawn correctly. Trend lines can be a bull trend line or a bear trend line. Bull trend line is simply a line with a positive slope drawn across the lows of a bull trend, similar to this one presented here. As you can see, a bull trend line in the uptrend is a line connecting two higher lows. As you know, an uptrend is a series of higher highs and higher lows. On the other hand, a bear trend line is a line with negative slope drawn across the highs of a bear trend. In this downtrend, a bear trend line can be drawn across the lower highs. As you can see, a bear trend line in the downtrend is a line connecting two lower highs. A downtrend is a series of lower highs and lower lows. A trend line is used mainly to initiate trades in the direction of the current trend by seeking entries on pullbacks near the trend line area. This chart is showing an uptrend, and a bull trend line can be drawn like this one. Here you can notice many trade entries to go along with this bull trend on pullbacks near the trend line. Whenever the price pulls back to the trend line, bulls are expected to initiate new longs, while counter-trend scalpers are expected to close their shorts, which help to form new legs up. On the other hand, trend lines can be used also to initiate counter-trend trades in the opposite direction of the main trend when the trend line is broken. This chart is showing an example of a broken trend line setup as a signal for reversal. As you can see here, the price was in a downtrend with a few pullbacks that have pretty much respected a straight bear trend line. However, near some sort of support level, a new low was rejected by the market, and then the price broke the trend line here with strong bull trend bars. And this strong trend line break was a good reversal signal for a new trend up, which is what happened here. But how trend lines can be drawn? A trend line can be simply drawn by connecting two recent swing points from right to the left of the chart. This chart is showing a downtrend with the recent pullbacks can be spotted here and here, and the bear trend line can be drawn connecting these two swing points. Always draw a trend line from right to left, because the right side of the chart represents the most recent price actions, so it has higher impact and predictive power on the future price action than the left side of the chart. So, for a trend line to be drawn, you need at least two higher lows in the uptrend, while you need at least two lower highs in the case of downtrend. The question of whether to contain the tails or just the bodies of the bars are controversial, but most of the time it is acceptable to include only the bodies and to ignore the tails. Which swing points to use is also a subjective matter. As a rule, the most recent two swing points are the most relevant. However, no one can be sure which swing points would be respected by the market. Therefore, it would be a good idea to draw more than one trend line when there are many swing points, beginning with the most recent swing point and extending the line to the left, and then to watch the market to see which trend line is better respected by the price action. This is the end of this lecture, and in the next lecture I will discuss practical examples of trading trend lines.